Hello, welcome to Mira Asset Sherkhan's Market Outlook for the month. I am Ankit Soni, and there's a lot to unpack in the markets for the month that has gone by. I will break it down for you point by point, ending with our high conviction ideas and investment strategy in this volatile environment across market caps. All you need to do is stay tuned. As we know, the markets are navigating a rough patch. There are two main causes for this. The first is the launch of Anthropic's Claude Cowork, an AI tool that threatens to upend the IT firms' traditional business models. And the second is protracted conflict between US, Israel, and Iran. Caught in the crossfire are also crucial energy economies such as UAE and Saudi Arabia. The writing is on the wall. There's an energy crisis looming. Impact of rise in oil prices. On your screen now is a list of countries with estimated effects on their economic benchmark if crude oil prices were to rise by 10%. Although India is better placed compared to other economies, we can expect inflation to rise by 20 bips, GDP to contract by 10 basis points, and current account deficits to rise by 0.2% of GDP. India is not the most fragile, but oil still meaningfully lifts inflation and takes money away from the common man's pocket. Now let's come down to market performance in the last month. The aforementioned factors have dragged the Nifty to 24,000 levels, with the index hovering at around 24,000 to 24,500 levels, indicating higher volatility. Nifty 50 plunged 8% over the last month as direct effect of geopolitical concerns. Overall, markets have fallen by 9%. Among sectors, Nifty IT faced the worst hit, following almost 15%, and the year-to-date falls more than 20%. Defense and pharmaceuticals outperformed among other sectors. On your screen, you can see how sectors have performed and what the earnings risk is for each of them. Let's now move on to market valuations. Large cap looks fairly valued with a price to earnings ratio of 21.3x and price to book value of 3.4x. Mid cap by comparison looks slightly stretched with a PE ratio of 31.4x. Earnings are growing, but valuation is already priced in. It is small cap, however, which looks most elevated, signaling caution. Many stocks are 40% below all-time highs, indicating a mismatch between earnings and elevated valuations. We recommend core allocation in high-quality financial names with earnings visibility. Our signal is accumulate on dips for large-cap sector. For mid-caps, we signal selective buying, favoring consumption-linked names and avoiding expensive themes. For small caps, we signal a trade with caution approach, focus on only debt-free positive FCF companies, avoid momentum-driven names without earning support. The key sectors to watch out, that the sectors that depend on crude oil and linked derivatives such as chemicals, paints, pharmas, airline, tires, agrochemicals and OMCs could be hit in the short run. Aviation, road, transport, petrochemicals and auto ancillary sectors are also very vulnerable to margin compression. We favor defensive plays in pharma and FMCG as hedges while staying overweight on defense and domestic focused businesses. Returns may moderate to 12 to 15% earnings growth, with crude oil prices and developments in West Asia serving as key monitorables. Finally, let's take a quick look at the high conviction ideas for the month. While near-term volatility is inevitable, history shows that equity markets recover swiftly post-conflict, making current corrections at attractive entry point for disciplined investors. Moreover, India's macroeconomic fundamentals remain solid, backed by robust forex reserves, domestic consumption, and a structural growth story driven by reforms and capex cycles. In this environment, we recommend trimming high beta and import heavy exposures, avoiding leverage, and maintaining liquidity. Thank you for watching out our exclusive market outlook. Unlock all our research offerings in a few clicks. Visit research.sherkhan.com to get daily calls and detailed reports across equity, mutual funds, F&O commodities, and more.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.